This is how Gtrend strategies help you handle automated trading. Forget staring at chaotic charts. This algorithm completely runs the show. It all starts with a master control that divides up your capital. Bullets. You just pick a number, and the bot instantly splits your funds into perfect dollar-cost averaging orders. That same number assigns your time frame, from patient swing trades to hyperactive scalping. When the market dumps, the engine actively protects your capital. It refuses to buy on red candles, safely trailing the price down. It only deploys funds when a green reversal is fully confirmed. For taking profits, Gtrend runs two systems at once. First, it quietly trims individual orders as they hit their specific targets. At the same time, it tracks your blended break-even price. When the overall position turns broadly profitable, it instantly clears everything out. But instead of selling the second a target is hit, the strategy uses candle confirmation as a minimum floor. It waits for a true reversal, letting you ride uptrends for massive gains. It's the ultimate hands-off system to manage your sizing, entries, and maximized exits. Purchase the Gtrend strategy today and check out our live demos to see exactly what is happening in real time. This is a quantitative strategy designed strictly for spot traders. This chart shows an adaptive spot trading trend-following system. The execution is governed entirely by algorithmic candlestick analysis. Multivariable configuration is bypassed. A single numerical input, called bullets, dictates the entire underlying structure. This master input determines the position sizing per order, the precise frequency of entries, and the execution speed of the trading engine. By stripping away manual parameter selection, all variable management shifts directly to the algorithmic engine. This ensures strictly balanced capital deployment without user intervention. This flowchart details automation. The bullets value maps DCA entry grids and calculates optimal trading timeframes. When a strong trend occurs, the system executes a shift to higher timeframes. When a trend reversal occurs, the system executes a pullback to faster timeframes. This dynamic timeframe shifting completely automates the transition between swing trading and scalping postures. The engine adapts its operating speed based strictly on live market data. The exact per-order trading limit is calculated mechanically. The maximum available investment for the specific pair is divided by the bullets number. This diagram shows a 10,000 unit capital allocation. Divided by a 10 bullet setting, the engine generates 10 distinct 1,000 unit blocks per individual order. The table shown here maps numerical ranges directly to fixed timeframes. The configured bullets value serves as the lookup key. Low inputs between 1 and 15 map to multi-day and weekly timeframes. High inputs of 46 and above map directly to high-speed 1 to 5 minute scalping timeframes. Manual trading grids require constant readjustment to avoid trapping cash during sudden market shifts. So how does Gtrend Spot 1 Automated adapt to volatile markets without complex tuning? Take this live trading chart facing a sudden sequence of volatile bullish and bearish candlesticks. Instead of tweaking a dozen inputs, a single automated bullets dial appears. This one dial dynamically maps the system's execution speed and timeframes directly onto the chart. The system automatically spaces out its buy orders at different price levels, creating an automated dollar-cost averaging, or DCA, entry grid that systematically lowers your average purchase price. But market volatility ignores static grids. If the chart crashes, a rigid grid rapidly drains your cash buying the dip too early. However, when a strong trend occurs and prints consecutive bullish candlesticks, the system executes a walk to higher timeframes, widening its scope to ride the momentum. But when a reversal occurs and prints massive bearish candlesticks, the system executes a pullback on the entry grids, halting aggressive buys to protect cash. The bot reads the Gtrend custom strategy identifier to guarantee this exact logic branch runs. And what about that crashing chart from the beginning? The automated grid survived the reversal and protected your cash. Because a single number calculates both the capital sizing and the timeframe mapping simultaneously, the risk of mathematically mismatched settings is eliminated. The entry logic operates in grouped allocations. The system divides the total available bullets by 3 to calculate the maximum volume of buy orders permitted per bullish candlestick. When a bullish green candlestick is active on the chosen timeframe, the system executes up to 3 separate DCA buy orders within that specific structure. This chart demonstrates the defensive posture. When a bearish red candlestick forms, the system executes a full pause on all buying activity. During this pause, the strategy strictly tracks the price downward across the bearish formation. 0 additional capital is deployed. When a new bullish green candlestick is confirmed, the system executes the next block of buy orders. This candlestick-dependent execution pacing preserves capital throughout structural downtrends, ensuring systematic accumulation triggers strictly upon confirmed upward momentum. Exits operate on two distinct layers of granularity. The first is a strict per-order protocol named gain partial. This chart illustrates the partial exit. When an individual order's specific entry price plus the percentage target is reached, the system executes a localized sell of only that specific block. Gain partial systematically trims profitable orders at the bottom of the structure. Higher underwater orders remain actively held and entirely untouched. Operating concurrently is the macro exit protocol, VEP take profit or break-even point take profit. Here, the chart displays how the strategy calculates a single blended break-even price. It mathematically aggregates every open order on the position into a unified baseline. When the overall blended break-even price plus the configured percentage target is reached, the system executes a simultaneous close of all open orders. Both the localized and whole position protocols operate at the exact same time. Whichever condition verifies its target percentage first triggers the initial execution. This dual architecture continuously harvests localized gains at the micro level, while securing the capability to clear an entire drawdown grid the moment average position profitability is achieved. The entire exit philosophy is governed by a singular global toggle known as trend take profit. When the trend modifier equals false and a target percentage is reached, the system executes an immediate sell at that exact point. This line graph displays the inverse condition. When the trend modifier equals true and a target percentage is reached, the system executes a holding pattern, converting the nominal percentage into a minimum threshold. The position continues trailing the positive price action. When a confirmed bearish red candlestick appears on the active time frame, the system executes the final sell order. This exact structural confirmation requirement governs the behavior of both exit directions, as well as specific downward entry triggers like the one-time drop metric. Activating this modifier forces the strategy to trail favorable volatility. Profits run significantly past nominal percentage thresholds and are locked in exclusively upon structural market reversal. This zoomed-out chart reveals the complete algorithmic cycle. Every dynamic action is derived directly from the single numerical input configured at setup. Position sizing, active trading timeframes, and DCA entry pacing are strictly and mechanically dictated by the bullet allocation. Localized scaling is handled continuously by the partial gain protocol, while total risk reduction is secured by the blended take profit protocol. When market conditions shift, the system executes dynamic transitions between scalping and swing trading postures using confirmed candlestick data. The resulting architecture provides quantitative spot traders with a strictly rules-based trend-following system that intelligently automates its own operating speed and defensive safety parameters. Take a $10,000 maximum investment with the bullet style set to 26. The algorithm divides the $10,000 by 26 to set the exact per-order trading limit and automatically selects the 6-hour timeframe chart from its fixed lookup table. Next, the strategy calculates available buying opportunity blocks by dividing the 26 bullets by 3. When a green bullish candlestick occurs, the system executes a block of roughly 3 DCA buys within that candle. But market trends reverse downward. When that green candlestick flips to a bearish red candlestick, the system executes a complete halt on all buying. The strategy simply follows the price down without adding capital, protecting your cash. When a new green bullish candlestick is confirmed, the system executes the next 3-buy block, and that 26 bullet setup, it automatically deploys capital safely across confirmed uptrends. How does the trend take profit setting prevent the system from exiting a strong rally too early? Fixed percentage exits trigger immediately, cutting off your gains, even if the market continues to surge. Take a blended whole position target where the price just crossed the baseline 1% profit threshold. When the price crosses the percentage threshold and trend take profit is false, the system executes an instant sell of all open orders at that exact point. But strong bullish green candles continue to form right after that instant sell line. You miss that specific upside by relying on a rigid, instant threshold. When the price crosses the same threshold and trend take profit is true, the system executes no immediate action, turning that fixed percentage into a minimum floor. The system now waits to act until a specific condition occurs, a bearish candlestick that fully closes to indicate a genuine reversal, a confirmed red candle. The price rides a sequence of green candles far past the original 1% floor. When that confirmed red candle finally appears, the system executes the entire position cell. And what happens to that initial blended position from our entry example? It exits far above the original target, capturing the full upside of the trend. This is an adaptive spot trading trend-following algorithm designed strictly for algorithmic systems operators to deploy capital systematically. The core architecture eliminates complex configuration matrices. It replaces multivariable setups with a single master parameter, known as the bullet style. The algorithm utilizes this single input to automatically map out dollar-cost averaging entry grids, select optimal timeframes, and regulate execution speed. When strong directional momentum occurs, the system executes a shift, walking to higher timeframes to maximize trend capture and allow positions to run. When trend reversals occur, the system executes a pullback to faster timeframes to protect available cash reserves. By removing human analysis paralysis, the architecture dynamically forces the system into the mathematically correct posture, whether swing trading or scalping, based entirely on live structural market momentum. The bullets parameter operates strictly as the system's DCA count dial. It determines exactly how many times the strategy can deploy capital into a given pair. When the bullets value is set greater than 0, the system executes the exact division of your maximum investment for the pair by the bullets value. Configuring 10 bullets on a 10,000 capital allocation results in exactly 1,000 allocated per order. The bullets integer queries a fixed lookup table to lock in the execution timeframe. Between 1 and 15, it selects weekly intervals for a swing trading posture. At 51 or higher, it selects 1 to 5 minute intervals for a high-frequency scalping posture. There is an operational override. When bullets is set to 0, the system executes custom mode. This hands-full manual control of all timeframe and sizing variables back to the user. For all non-custom strategies in the network, the bullets value must remain at 0 to prevent internal timeframe logic conflicts. Applying a trading limit multiplier exhausts the bullets budget faster. It consumes more capital per order, altering the real DCA execution count. Ultimately, the bullets parameter is the foundational algorithm mapping the exact trade frequency and capital density per order. This candlestick chart details paced capital deployment. When a green bullish candlestick confirms, the system executes a DCA block of 3 buys. Total opportunity blocks equal the bullets integer divided by 3, refusing to spend the budget simultaneously. During drawdowns, the candlestick sequence shifts from green to red. When a red bearish candle confirms, the system immediately suspends all DCA buying. It tracks the price decline without adding risk, physically preserving cash during the downswing. When a new green bullish candlestick confirms, or price breaks above the prior red bearish candle's high, the system resumes the 3-buy DCA blocks, recognizing a structural shift back to bullish. The DCA entry matrix relies exclusively on definitive structural candlestick validation. This creates an aggressive trailing entry that shields capital during bearish conditions. 2 separate mathematical tracking functions run simultaneously to close positions, operating as dual vector exit protocols. This split screen illustrates both factors. On the left, gain partial is the per-order mechanism. When price crosses an order's entry plus the percentage, the system executes a take-profit cell for that individual order only, isolating specific entries. On the right, BEP take-profit is the whole position override. It calculates a singular blended break-even point across all open orders. When price crosses this average plus the percentage, the system executes the opportunistic closure of all open orders simultaneously. When either the gain partial or the BEP take-profit threshold is reached first on the chart, the system executes the corresponding exit logic instantly. Gain partial trims specific data points incrementally as price fluctuates, whereas BEP take profit operates as a macro-level safety switch to immediately liquidate broad positions into profit. The trend take profit parameter is the global Boolean switch governing exit philosophy and DCA spacing. When trend take profit is set to false and price crosses the percentage threshold, the system executes an instant fixed point buy or sell order. This chart illustrates dynamic execution mode. When trend take profit is true and price crosses the percentage threshold, the system executes a wait state, holding execution and converting the percentage into a minimum activation floor. When a confirmed red bearish candlestick closes, the system executes the final take profit sell order. This validation logic creates a trailing exit, permitting profits to climb well beyond the original percentage floor during an unbroken trend. Ultimately, this single global toggle simultaneously dictates candle confirmation behavior for both the exit vectors and the entry conditions. True trend capture requires ignoring fixed mathematical ceilings. By relying entirely on absolute structural candlestick validation, the system maximizes duration in the market. The complete eradication of manual parameter analysis and configuration errors is systematically achieved via the single self-regulating bullets input dial. All position sizing, algorithmic timeframe selection, and DCA execution blocks are strict derivatives of that single integer. Dual vector targeting continuously evaluates isolated order profits alongside blended position break-evens to enforce rigorous cash protection. Dynamic candlestick validation delays exits precisely until structural reversals are confirmed, forcing winners to run. Buy Gtrend strategies and visit the links to view live trading on the active demos. Gain partial is a per-order take-profit setting for complex entry grids. Instead of waiting for a blended position to break even, it pulls back cash during reversals. Take a DCA grid where the strategy bought Bitcoin 3 separate times, with the lowest at 55,000. We set gain partial to 1%. Every single buy order gets its own independent profit target, based purely on its exact entry. When a price move 1% above the 55,000 entry occurs, the system executes a sell for only that order. But the other two higher buy orders remain open because they have not reached their specific targets yet. When a target cross while trend take profit is true occurs, the system executes a hold for a bearish candlestick. When a cross of any individual order's profit target occurs, the system executes an independent close for that order. The lowest order cashes out independently to realize profits. The position secures cash without waiting, even while managing a deeper drawdown. Instead of staring at complex charts all day, you set your capital and let a smart algorithm adapt to live conditions. It starts with a master dial called bullets. Type in one number and it automatically divides your capital into perfectly sized orders. It also picks your trading speed, scaling seamlessly from patient swing trading to hyper-speed scalping. But here is the secret to preserving your capital. The bot actively tracks market structure. If it spots an active dump with red candles, it completely stops buying. It patiently follows the price down, protecting your funds until a green reversal is confirmed. Once you are in the trade, the engine hunts for profit on 2 levels at once. It quietly cashes out individual orders as the price climbs, while calculating a blended average price to opportunistically close the entire position at once. And if the trend goes parabolic, the bot ignores fixed percentage targets. It turns those targets into trailing floors, riding the momentum upward, and only locks in profits when a genuine reversal candle appears. Manual crypto trading means constantly doing math for order sizes and flipping through chart speeds. But the automated bullet setting solves this with a single input. Let's say you have $10,000 ready to deploy into a new coin. Job 1 is sizing. It automatically divides your total allocation by your bullet count. Set the dial to 10 bullets, and it perfectly slices that 10 grand into $1,000 orders. But slicing up your capital is only half the battle. The algorithm still needs to know how fast to spend them. That's job 2. The dial is actually a hidden timeframe selector. Select 5 bullets, and it locks into slow, multi-day charts for patient swing trading. Crank it to 46, and it instantly shifts to 1-minute candles for rapid scalping. The strategy fires these bullets in blocks of 3 during green, bullish candles. But if the trend flips red, buying completely pauses to protect your capital. It's fully automated and ready to trade. Grab the strategy today and deploy yours.